All right. So I would like to wrap up this week's content today. All right. So that is the purpose of this video right now, so that we can wrap it up this week. Okay. So we only have um some psychology, and then trade plan development, and then um the roadmap that you should follow or you might follow depending on um what you decide. Okay. Um. All right. So let's start. Let's start with the first point. All right. So the first point is that your compelling desire. Before we get started, though, anytime you have any question that you might have during this teaching, all you have to do is just write it down. Okay. And then on Monday afternoon, while we're checking the charts, we shall um we shall treat those questions together. Okay, so while we're watching price, I would answer all your questions. So anytime you have a question, just put it down in your notes and then ask it on Monday afternoon during the practical session. Okay, so um, the first point is that your compelling desire to win is killing your chances. All right. So something that affects traders is that they want to win. They want to be the baddest trader out there. They want to be. They are in competition with people they see on social media, right? So they want to have the best RR, the pioneer stop loss, you name it, the best lipstick, the best design on the chart. There's no award for that, all right? There's no award for that. The award you get from trading is profit. The award you get from trading is profit, all right? The award you get from trading is profit. So you don't need that desire, that um compelling desire to win. You're so scared of losses. You don't want that loss. The loss is like the market rejected you or something. If you keep on holding on to that kind of sentiment, trading is going to be quite difficult, quite tough for you. Trading will be quite tough for you, all right? So you need to let go of the mindset that you have to win all the time. Stop having um that compelling desire to win all the time because the losses are inevitable. All right. Hold on. I'll be back. All right. So I just have to get away from the noise. So the compelling desire to win is going to hurt you in the long run. Don't be too much in a haste to prove that you are a god of the market or you are very, very good at what you're doing. Give everything the time it takes. Okay? If your trade requires you to wait for certain conditions, don't jump in or rush trying to get in at to get more pips or to do whatever cool stuff that you can show on the internet, or you can tell yourself, oh my god, I'm such a good trader. All right, so get rid of the compelling desire to win, and that is one huge problem that you can surmount as a trader. All right, so now let's talk about the five. Sorry, I have a little kata. All right, so let's talk about I don't know which point am I talking about here. Sorry, I'm going through my notes. Okay. All right. So now let's talk about the things you need to succeed as a trader. Okay. First of all, you need an edge. We've spoken about edge before. Your edge is all the things that come together to culminate in a high probability that you are going to win at the long run or be on the long run. So your trading plan, your trading rules, your trading laws, that's your edge. All right. So also you need to know how you intend to enter the market based off of your system. So based on your system, how do you intend to enter the market? What is your risk model and what is your ideal trade setup? You should know this. Okay. I do hope that you're putting down these things in your notes because I'm not going to type anything today. So I'm just going to be speaking basically. But I wanted it to be a video anyway, so that we'll have that. Um, we'll have the folder to be in unison. Okay. All right. So how do you intend to enter based off of a system? So what's your risk model and your trade setup? Okay. How do you intend to manage? So this is another point here. How do you intend to manage the trade based off of knowing your current stance about the market of your choice? All right. So how do you intend to manage the trade? When are you moving your stop loss? When are you taking partials? All that business. Okay. So you need to find out all this information um before you put your money on the line. Okay. You need to find out some of these things before putting your money on the line. All right. So we're going to move on to the next point right now. Yeah. So also after you found your trade setup, what you've also known your risk model, how you're going to what you're going to risk, and how you're going to go about it, how you're managing your trade and all that business. You also need an exit plan. Okay. So many traders don't have an exit plan. They don't have like, okay, once you get here, I'm taking everything. Okay. Some traders trade without a TP. Okay, so they have no final target in mind that okay, once you get here at 35, the greed is just unending. So they leave the trade, they are trying to get as much as possible from it. Okay, so in an exit plan, where would the market likely turn? Where would the market likely turn around, and then you might now be in trouble for holding your trade? When will it no longer be profitable for you to hold that trade? Okay, so you need to know that point as well. So you need to have an exit plan when you are in the market or before you enter the market. Sorry, before you enter the market, that exit plan should have been in your head already. All right. So you need to be rigid and flexible at the same time. You need to be rigid and flexible at the same time. So you need to be rigid with your rules and flexible with your expectations of the market. So don't expect much from the market. What the market gives you, you take and move. Don't hold on to a bias a very strong way. Don't say okay, it's a buy, it's a buy, it's a buy. And even when the market is saying, oh, I've changed gears, you're still trying to buy, trying to fight the order flow, trying to fight the trend, trying to fight the market. So you need to be rigid with your rules and flexible with your expectations. Okay, so um be rigid with your rules and be flexible with market insights, but the market must fit your rules. So if you are buying, or let's say if your bias is a bullish bias, and then the market is obviously showing you that the momentum has changed to the downside, right? The trend that the bias is now bearish. You have to change your bias as well. But then, before you enter a trade to the downside, that trade must also fit your rules for trading. So even as you're being flexible in the market, you must also make sure that as you're changing your opinions about the market, your opinions, you must also make sure that the market also fits in with your rules before you take a trade. All right. So how to execute more efficiently? Number one, you need to choose a time frame that suits you. Okay, so you need to choose a time frame that suits you. A time frame where you can trade efficiently, you can trade in a relaxed manner, you can have enough time to monitor the market. Okay, so uh, do you have little time? So if you have little time, for example, if you have little time and You don't need too much time to analyze the market. You can be a scalper. If you have more time on your hands, I can sit and wait and watch. You can be a day trader. If you have less and less and less time, and less time to also sit in front of the chart, you can also increase the duration of your trades. You can start trading from the 4 hour chart or the daily chart, whichever you prefer. Okay, so you can be a position trader or you can be a swing trader. So you hold trades. If you are a swing trader, you hold trades for at least 2 weeks. If you are a position trader, you hold it for months. Okay, so for those kind of traders, you find very very few setups a year. The position trader will find the fewest setups. A position trader may find just like 2 or 3 setups in a year. A swing trader might find up to maybe 10, 20. Okay, so that's how it goes. You have to find the time frame that suits you. So where are you getting your buyers from, and where is the time frame you are choosing? Okay. Also, you need to know your setup details. What does your setup look like? You don't just go into the market and look for random things. Let it be one thing. I've said this thing before. It should be one particular thing, one particular underpinning in the market that you should be searching for. Don't go around looking for different things. Look for one particular setup, and once you see it, your um your predatory skills are just activated like that, and then you take your trade. Place all your risk management and trade management rules in place and execute perfectly. Okay, so have that vision of you should have a visual representation of what your ideal setup looks like in your mind. All right, or maybe even you should write it down or somewhere so that you can see it and you can go through it, go through all the steps before you take a trade. You go through all the steps and make sure that okay, it all lines up. And after a while, you can now get rid of your writing and then be able to execute it with just your mind because you have done it so many times over. All right. Also, you need to modify your setup to increase its efficiency. So whenever you have an opportunity to modify your setup, maybe you could you could tweak the time of the day that you're trading or the days of the week you're trading, okay, or the hours of or the period or the time in a session that you're trading. So maybe you can say for London session, I'm only entering a trade between 8 a.m. and 9 a.m. or something like that, or 7 a.m. and 6 a.m. Okay, something like that. Keep on tweaking your trade. Find a way that can make it better. Master that setup, but also find a way to refine it as much as possible and get used to that thing. Squeeze out as much potential as you can from that kind of edge, from that kind of setup. All right. Um, by refining it, I don't mean particularly trying to start tighten your stop loss because that is what most traders view as a refinement. That is not the only way to refine, and in fact, tightening your SL might not be too advisable most times because you have to give the market space to breathe, and a tight SL doesn't guarantee profitability, and also a wide SL doesn't mean that you will not be profitable. Okay, so you need to give the market what it needs, not what you think it should need. Okay, if the market is telling you that okay, I might gallivant around this area and this area is 40, 50 pips, you don't go and look for the tiniest place where you get 10 pips or 5 pips SL. No, you give the market what it requests for. Okay, and that's the easiest way to be profitable. Don't overdo. You don't, as a trader, you don't have to overstress yourself to make money. People that are making money, they don't overdo things. They don't. They're not. They're not all like geniuses or masters of different strategies or whatever. They're not people that are bending the rules up and down. They're not like crazy, outrageous traders. You understand what I'm saying? You feel what I'm where I'm going. Okay, so refine your setup. Find the time it works best. Know what is a good day, as in when you're trying to find a trade for your setup. What does a very good setup or very good conditions represent for that trade, and what will a bad kind of setup look like? Okay, so you should know okay, these are the kind of conditions that are favorable, and in this kind of conditions, they're not really favorable. So this is where your daily logs will come in handy as well. Okay, because if you have seen something over and over and over again, you can now know more about it. You can know more about it and know when it works well, when it doesn't work well, etc. Okay, somebody else might do the work for you as well, but you need to be careful with your executions too. All right, so you need to master your setup. Okay, you need to master your setup. You need to master your setup. You need to study it and refine it to the absolute best that you can. Okay, as absolutely insane as you can. Okay, refine it as much as possible. Right. Okay. So now let's talk about the five ingredients to a disciplined trade plan. Okay. First of all, your mindset needs to be right. Okay, you need to have a proper mindset going into the market. You need to have a winner's mentality, but not be too excited. Okay, you need to view the market as probabilities. Okay, and if you want to tilt the probability in your favor, you trade in high probability conditions. Okay, so going with the right mindset, you need a trade model as well. Okay, we mentioned trade models as many times as possible during this training. Okay, also you need analysis and planning. Okay, so many traders don't analyze much, they just go into the market, see something, before you know it, they're inside the trade. Sometimes you need to stock the market and make sure that what you are doing is proper. Don't be in too much of a haste to place a trade, because every trade is risky. Don't be too much in a hurry to dash your money to the market. What you want to do is to make money. So if your trade requires you to be patient, to analyze, to wait for something certain to happen, something specific to happen, wait for it and stock that trade for as long as possible. Trading teaches patience a lot. Okay, and if you don't learn the lesson of patience that the market is trying to teach you, you will suffer for a very long time until you learn that lesson. Okay, so you need to analyze and plan properly. Take your time with this thing. Okay, all right. So you also need an execution, management, and exit plan. So what will the market form for you to execute? What will your trade management rules be like? And what's the exit plan? All right. So the last one here is a risk module or a law. In fact, not even this your risk model should be a law to you. You should never stray from it. Don't say my risk law is 1% per trade max or 2% per trade max, and then later on, because of greed, you risk 3%. You are breaking the law and you should be penalized. Okay, so as a trader, you need to be disciplined in yourself. Nobody's going to penalize you, but if you keep on breaking your rules, in the end, the market will be the one to punish you for it. All right, so a risk module is very important and it should be very strict. You should never, ever stray from it. Okay, so these are the five ingredients of a disciplined trade plan. Five ingredients of a disciplined trade plan. I'll go through it again. First one is a good mindset. Fix your mindset up. Okay, fix up your mindset. Second one is a good is a trade model. All right, is a trade model. You can have multiple trade models. It doesn't matter. You mustn't have just one. You can have multiple ones. Okay, so let me say you have one that is high probability, one that is medium probability, and one that is low probability. Low probability one is the one I just want to take based on maybe your hands is scratching you, so you just need to take a trade just to get rid of that feeling that you should take a trade. Okay, even though your target is to totally eliminate that kind of feeling later on, but in the beginning you might not be able to completely eliminate such a feeling. All right, so you can have up to three or more setups. Okay, have something that is high probability, one that is medium, and one that is low, or you can just have one depending on you. If you find one and it's okay for you, you are satisfied with it, then you can run with it. All right, the third one is analysis and planning. Fourth one is execution, management, and exit plan, and this should not be based on emotion. It should only be based on logic, on fact. All right, and also you need a risk module with a which is a law that must not be broken. Okay, so these are the five ingredients of a disciplined trade plan. Okay, now things you should not do. All right, things you should not do. Number one is aping around strategies. Aping around strategies. Okay, so you see one strategy, you learn it, and tomorrow you're learning another thing. Once you find a strategy, stick to it. Okay, stick to it. For example, right now I can't ever leave ICT trading style. Okay, I found my place. I found where I belong, and I know that people are making money with it. So if I'm losing money, then I only need to fix myself or find a way to better execute the strategy. So don't jump from one to the other. Okay. So now that I have learned this one, if you are new, don't just jump into another one. If you already had a strategy before this training, um, I don't know if it was working for you, you can stick with it and maybe just put a little bit of what you've learned on top of it. Find a way to blend it together. Okay. If it wasn't working for you, then it is worth considering these new things that you have learned. Okay. So since what you had was not working for you, you might try something else and see if it works. If what you tried works out for you, you stick with it. Okay. So that is how it works around here. All right. So stop aping around strategy. Stop jumping from one strategy to the next one. Every every new month here or something new. Okay. So today you jump from BTMM to this one to that one to Wyckoff to LL Wave to this to this. That. Stop it. All right. So number two, don't hold your losers and cut your winners. Some traders are going to hold the losers and cut short the winners. Very funny way of doing it. Okay, so you see a trader is a losing trade and you is close to your stop loss, say, ah, no, I can't lose, I can't be wrong. Okay, let me shift this stop loss. Any stop loss I enter with, I blame myself, okay, for maybe entering with the wrong stop loss. I don't just go around and shift the stop loss. I take the L and look for the lesson there. If the lesson is that my stop loss was too tight, I learn the lesson and move on. If I can find another setup, I enter it. Okay, but don't be moving around your SL and letting your losers to be dragging on and on and on and on. Sometimes your risk, your strategy might just be something that you should see immediate response from a particular level. So if you don't see immediate response from that level, that might be a sign that you should cut off the trade even if it does not hit your stop loss. So sometimes you can remove a trade without it hitting your stop loss. Okay, so be very brutal with your losses. Cut them clean as quick as possible. As soon as you notice that there may be something wrong with it, okay, that there's something wrong with that trade, you can quickly cut it off. Don't wait till the loss becomes detrimental. Okay, and allow your winners to run far. Don't cut it too soon. This is why I encourage taking partials, okay, because you can allow that winner to keep running. You can take profit. I know that no matter what happens, you've already banked something, you've already taken something from the market. So you've paid yourself, and all you have to do is now to wait and see if the market is going to offer you more profit. Okay, so allow your winners to run. Don't just see small profit and get scared and cut it off and close your trade like that. Your risk to reward ratio will not be good later on down the line because you are cutting your wins. Okay, so let me say your risk reward ratio was supposed to be 5 to 1, and then you are cutting it at 1 to 1, and your stop loss is 1 to 1 as well. Before you know it, if your strategy is not up to 50% accurate, you are going to be running in a loss in general. Okay, so that's just it. Stop taking multiple entries for the same trade. Like this is one big problem in the trading industry. You see so many people taking multiple trades. You see gold, 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 gold. You just see blues, food is something, and you think that oh my god, this guy is so good. But just one trade, okay? Just one trade setup, and the person is being greedy and is opening so many positions. What if the market suddenly turns around? Maybe something catastrophic happens, and then everything turns around. All those trades, those that huge profits, will turn into a huge loss instantly. and then you will be regretting. You might just blow your account at that instance. Okay, so um, put in a single position, find your risk percentage, find the amount you should risk on the trade, and put in that amount. No need to add too many positions on top of it. One position is enough. Okay, just one. You enter, and once it's time to take profit, you take profit. When it's time to close, you close the trade. All right. So keep it simple, keep it soft, keep it um lawful. Okay, if there's any word like that. Have your rules, have your laws. All right. So stop fighting the order flow. Okay. So if the trend is bearish, don't fight it. Be on the side of the trend at all times, as much as possible. Okay, be on the side of the trend. Okay, stop carrying a strong bias. Be flexible. Goes back to what I said earlier. Be flexible with your expectations, rigid with your rules. So if the market changes from bullish to bearish, start looking for a bearish opportunity that suits your personal trading models, or one of your personal trading models. Okay, so be flexible with the market, be dynamic. The market changes every now and then. Okay, so if the gear has changed, you should also change gear and turn around with your buyers. All right, so um and do not ignore the secret ingredients. And the secret ingredient is what I spoke of earlier, which is the five ingredients of a disciplined trade plan. Okay, which is what I spoke about just before this don't do section. Okay, so even if you need to write those secret ingredients on a paper and put it in front of you when you are trading, write it down, put it in front of you so that you won't forget these things. Before you know it, you might imbibe such a mindset and then trade well with it. All right, so um, I'll end this teaching with this note. So you can fail, lose, suffer, endure, okay, fall and miss. All right, but in the end, make sure that you win. All right, because if you give up in the middle, all your efforts of watching all the live classes, all your effort of doing a daily log, all your effort of checking the market, all your years you have wasted studying forex, all the years you have wasted studying different trading strategies. Once you quit, all that is gone, all that is lost. All right. So permit yourself to fail, okay? But in the end, make sure that you see it to the end. Make sure that you become a winner. All right. So, yes, I wish to see you guys at the top. Okay, so I would end this video here. All right, and in the next video, we're going to talk about um different things that you need to incorporate into your trading plan. All right, we're going to talk about that so that we can wrap up the content for the week. All right, so see you in the next video.